All right, I'm going to start off with this image here of the daily Euro US dollar chart. And as you can see, can everyone see the chart and how I'm, moving things around? Everything good? Okay, great. Okay, one sec here. All right. You can see here, from an Elliott wave point of view, okay, the rally that we had near the Thanksgiving holiday was just shy of 150, but that likely completed what is wave 3 in a 5-wave bullish cycle, okay, from this low here, okay, where my pointer is, which was 132.61. You see, 1, 2, 3. Now we're in 4 currently, okay, which is likely to come down probably in the 144 region. Okay, expected to retrace anywhere from 23.6% to 38.2% of the wave 3 rally, which in this case was 133.60 to 149.67. Okay, that places our support zone in the 143.50 to 145.90, which is a large zone, but we can shrink that zone, okay, when we shrink down the charts in smaller time frame, okay, and within wave 4, it consists of A, B, C, okay. You can see how we have what is likely already finished as A, which, was the initial decline to 146.20, okay. We had a bounce the last couple days, last 3 days, 4 if you include today, and now we're rolling over in what is probably wave C of 4, okay? And wave C of 4 would equal wave A of 4 down near the low 144 region, okay, which makes it more likely that we're probably going to, come close to 38.2 at 143.50, okay? What's interesting to note is that you still hear a lot of, in the news, worries about the dollar, all right? Just like the stock market climbs kind of a wall of worry, right, one might say, the U.S. dollar can fall despite a lot of fear, right, until things get absolutely out of control. So I think it's probably a really, really good buy in the euro, down near the low 144 region. And in that instance, it's a ways away, so it's a pretty good short at the current levels, right? So after we come down to the support zone that I've talked about here, okay, we're looking for a thrust higher in wave 5, which is wave 5 of 3, which is part of wave 3. I just had a question, is this part of wave 3? Yes, this is part of wave 3, okay? Wave 3 that began at 132.61, okay? And then that, minimum rally is through 149.67, okay? And likely an extension for a couple hundred pips through 150. Fifth waves tend to be extended, and if we just gauge where wave 5 would equal wave 1, okay, from 143.50, just assuming that it ends down there, then we'd have a rally that travels about 600 pips. Let's see here. So that'd be just through 150, basically, okay? As, the pattern plays out, we can always get tighter and more accurate on our objectives, bullish objectives, as well as determining exactly when wave 4 is going to end. So keep following up on the technicals because I update them every morning. And as the pattern evolves, okay, and plays out. Okay, the next chart I want to show is this dollar CAD chart. Can everyone see the dollar CAD chart? I just switched to dollar CAD chart from the euro dollar chart. Okay, great. You can see here that we spiked through 102 this morning, went all the way to 102.16, and price is already back down below 101.50. Okay, look at that support, or that resistance level there. Okay, this is the confluence of a trend line and the 61.8 of the last decline from 108.66 to 90.55. Okay, this is a very strong confluence. And we're seeing that as the price has already come off 75 pips from where it was just about an hour and a half ago. Okay, so this initial advance, okay, is likely the first advance, I think, in a larger advance. But we're going to get a corrective decline before we get the next advance. And one thing I want to show everybody. This is a 13-day rate of change study that I placed on the bottom here. Okay, rate of change, you tend to get, the earliest, the strongest readings of rate of change or momentum, okay, at the beginning or middle of a trend, okay, at trend change. So you can see here that rate of change was extremely high, okay, after this last turn. That's kind of like a signal. It's like a kickoff for a new bull trend is underway. Okay. Everybody, well, dollar CAD you can watch right now is just falling very hard. It's down at 101, below 101.30 now. So I put this chart up. I think it was at 101.60, and that was just about 5 minutes ago. So you can see, we'll wait for the rate of change indicator to come down towards the midpoint here, towards 0. And when it does that, that'll be a signal that you buy the corrective decline, okay? Now, I also want to switch to New Zealand yen. New Zealand yen is unfolding in a large triangle pattern, I believe. Okay. You can see here just A, B, C coming up in D right now, which probably doesn't terminate up until about 87 or 88. Okay, which is 300 to 400 pips from now. And then we'll probably have a little bit of weakness in the fifth wave of the triangle before we break out for good in New Zealand yen and make a new high above the July high. So with this, seeing on these charts, the daily charts and 240-minute charts, we're seeing near-term probabilities that say weak euro and strong commodity currencies. Okay. And one of my favorite trades is actually, let me pull this chart up. It's actually Euro Kiwi. And I know it's, hold on, let me shrink the chart because it's going to be too big. Okay, here is Does everyone see the Euro Kiwi chart? All right, great. You see here, this was back the September high, okay? And if you follow with me, you can see that this is a 5-wave decline, very clear. Well, I don't have it labeled, but I'm going to count for you. 1, 2, 3, 4, and then 5. Then we had a very clear A, B, C, okay, up to 199. Then we had what is now 1, and the next 1, 2 sequence with 3 beginning now. The high this morning, or last night I should say, was at 194.63. And if you follow our forum, I wrote last night on the Elliott Wave forum right before I left work that this was going to offer a great short opportunity. Just wait for a spike through 194.51 to sell. And the high last night was 194.63. We're over 320 pips lower now. So this was, I think, one of the great trades for the next few weeks. Euro Kiwi short, and the objective isn't even until below 182, okay? And that's in 900 pips, but the way this pair moves, that can happen in a matter of days, 2 or 3 days, easily, okay? And again, if it, you know, although you missed probably the best entry last night, when it does break this low here, that would be, you know, confirm that a top is in place and that, you know, you could sell again. So, and that is the 190 level, which is just 140 pips from here. And again, the way this moves, that can happen in a matter of hours, really. So the theme that I'm really seeing in the markets as far as looking at all the pairs, all the dollar crosses, as well as the yen crosses and the euro commodity crosses, is that we're probably going to see a period of carry strength, right? These euro commodity crosses are falling. The Kiwi yen cross I showed you looks like it's going to rally for at least 300 to 400 more points in the next couple days. And the dollar yen itself, I think, has put in actually a significant low. And let me show you that chart. Okay, here's the dollar yen chart. Goes back to the 107.20 low. Okay, and here we can follow 1, 2, 3, 4, 5. Pretty clear there. Now, I proposed this morning in the technicals two counts. One has the completion already done at 109.50-ish. Okay. You see A, B, C, that's 3 waves. And the other one, which was actually the one I prefer subjectively, is that we're A, B in a larger correction down to 109. Now, this morning's strength probably tells me that that was wrong. Okay, and I did say that a rally through 110.67 would confirm that, and we're already at 110.65 right now, so really 3 more pips, and we could say that the bottom's in place. Why? Because we have a new 5-wave uptrend, right? 1, 2, 3, 4, 5. That means a corrective decline back to the 110 figure would offer a great opportunity to get long for the next advance, right? And again, this confirms what I've seen with the other pairs, which is that carry looks like it's going to be fairly strong, okay, going over you know, the next week or so, couple weeks. I just got a question: how many pairs do I watch? You know, probably upwards of 20, I guess, after it's all said and done. But really, if I'm looking at just the dollar crosses themselves, which is 7 major ones, okay, then that's really enough. Because if I'm, you know, looking at, say, euro dollar, and I'm bearish euro dollar, which at the current moment I am, and I'm looking at Kiwi dollar, New Zealand dollar, and I'm bullish that, then I have a pretty good feel for euro Kiwi short, right? So you just really need to look at the major ones, I think, and then you get your theme from that and your big picture, and then you can put it all together after that and find the best trade out there, right? At this point, I would say Euro Kiwi is probably the best trade out there for the next, you know, few days, very short term. Kiwi across the board is, I think, the best trade long, and I'll show you why. Here's how I start my week every week. by looking at the commit traders reports, okay? This here is the commit traders report and how I've put the data into, the way that I look at it. This top red line is the 52-week percentile, okay, measurement of percentage of commercial long. So you take all the commercial hedgers positions, find out which ones are long, how many are long, so they take a percentage of that, and then a percentile of that, okay? The same thing is the next line, but for speculators. And then the next two lines are 52-week and 13-week, so 1 year and 1/4 of a year. Difference between commercial hedgers and speculators, as measured through a 52-week percentile. Okay. And I'm sorry, hold on for 1 second here. And the way this works is you look for when both groups are on exact opposite sides of the market, okay, at the most extreme. All right. In this instance, you can see back in August, commercials were long, very long. Speculators were very short. And we were at a bearish extreme, as indicated by the blue lines being at the bottom. That's a very strong buy signal. We are almost at the exact same point right now, okay? This indicates to me that Kiwi is extremely, it's ready to just skyrocket, okay? Interestingly enough, the exact opposite formation has occurred here with the dollar-yen, okay? And keep in mind this is yen futures, the way this is, so it's actually not dollar-yen. So you see here that commercial hedgers are extremely short yen, speculators are very long yen, okay? And there's a bullish extreme on yen, right, as measured by these blue lines being up towards the 100% line. That means that yen is extremely overbought, and the last time we had these conditions was in August, right? That was when the yen was down at 111.60, okay, and we promptly rallied up to 117.93 in a matter of 2 months. All right, so that tells me that, yen is very overbought, Kiwi is very oversold. Therefore, carry should probably do pretty well over the next month or so. This also fits with a, looking at the stock market. Okay, this is a view from the top. Okay, we have 1, 2, 3, 4, 5 down. Okay, this was a chart I showed a while ago in the forum as well. Okay, 5 waves down indicates a trend change, but not before a very substantial rally occurs. Okay, we've already had that initial impulse rally off the low. We're likely to have a little bit more erosion here. Okay, probably maybe down to 13,000 or so, which is 250 points from the current levels, before a rally up probably through 13.6. All right, so you say down a couple hundred points and then up about 600 points. Right, this all fits with the theme of carry doing fairly well over the next few weeks. All right, I pretty much covered, my points and everything I'm seeing right now, and I'd really like to open it up to any questions, any specific pairs, or questions about analysis or trading or anything that you guys have. So if you have questions, then shoot. COT. COT is, you can get the data yourself if you'd like to from the CFTC website, which is www.cftc.gov, okay? And there you can find historical data where you can analyze the data as I've done here, or you can also just go to our website, www.dailyfx.com, and on the right side of the page is little box where at the top it says Charting Center, and below that you'll see the IM Commitment of Traders report, and that's exactly what the COT report is, Commitment of Traders. So you don't have to go download the data yourself if you don't wish to. You can just read it from our website. Okay. The forum is a link from our website. All the articles that I write, as well as everyone else here, Daily FX, is at www.dailyfx.com. And if you wish to join the forum, you can click on the top of the page. There's a link called Forum Home, and click on that, and it'll take you right to the forum. Okay. I have a couple questions here on Euro, Yen, and Aussie, and then about which indicators I use, so let me address those quickly. Okay, the Australian dollar. The Australian dollar, I've been actually looking for a rally here, and it has held above the 86.53 level, which I would consider a stop level. Okay, but you see the support here. Okay, not only from the 38.2 here, but also from this low, the 10.22 August low, all these lows here. So I was actually looking for a rally to occur up through 90.68 at the minimum. Okay. And again, this does fit with the carry theme. So yes, until 86.53 is broken, I would, urge, or I would, say that a bullish bias is warranted. At this point, a cautious one, considering that we're so close to the stop level. Okay, Euro Yen. Euro Yen, like all the carry pairs, I'm bullish on, except for really the euro. Looks like to me that a triangle is unfolding here, right? If you see this, I'll draw the lines. Okay, a triangle. So you can expect maybe a little bit more weakness, maybe into the 160 before a thrust higher. Okay. Let's see, what common indicators do you rely on? I like just simple, rate of change and RSI, but I really actually don't look at indicators all that often. I look a lot at sentiment indicators, right? Such as the Commitment of Traders reports, okay? Elliott wave analysis and patterns are my, basis for my analysis. And there's a question here, do you weigh more towards wave analysis than chart patterns, like head and shoulders and continuation patterns? Well, they're actually the same thing. A head and shoulders pattern, will happen when you've finished a 5-wave rally and you have an A-wave decline and a B-wave advance, right? The former 4th wave and the B-wave are the shoulders, and the 5th wave peak is the head. They're the exact same thing. There's just different names for it, okay? Continuation patterns like triangles and rectangles and things like that are the same thing as Elliott wave patterns, triangles, it's the same name, or flats, all right? In Elliott wave, it's called a flat. In traditional chart analysis, it's called a rectangle. So those are all the same thing. And that's, I think pattern analysis is the most important. Okay, for one, you're studying price, and that's what you're trading. You're not trading any indicator, you're trading price. 2, the psychology that, you're studying in chart patterns is represented in the price, right? Not necessarily in the indicators itself. Indicators are complementary tools to chart pattern analysis. Okay. Here's the pound-yen chart. Someone asked to comment on this. At this point, pound yen, is kind of in no man's land as far as I'm concerned. Looking at the pound dollar chart itself, okay, there's going to be very strong support probably down here at the 2 level, okay, actually probably closer to 201. You can see this chart here is a channel that dates back to May 2006, all right. and it's breaking down the midpoint of that channel line, and it's going to approach the channel support at about 20065 today, and tomorrow that line increases about 4 or 5 pips a day. So, you know, down towards 201, it should have pretty strong support. And again, I'm bullish dollar yen, so, you know, bearish pound dollar, bullish dollar yen probably results in the same thing as euro yen, which is like a triangle or a continuation pattern of some sort. Minimum time frame that I'd look at, well, you know, this is I get this question a lot, and you know, trading is very personal, but so, you know, there's scalpers that would look at 5-minute charts or maybe even a minute chart, but I personally, you know, I like to keep things on the hourly and above. I think that anything less than hourly, and you're just, you know, you're looking at a lot of market noise. So, you know, that's really about it. I think, you know, so I guess to answer the question, I guess hourly would be the minimum time frame that I like to look at. But again, you know, if you like to look at even lower time frames, that's up to you. You know, you have to do what you're comfortable with. So I will say this, that again, pattern analysis and chart analysis is really just a study of psychology, right? And it's a statistical study at that. So like any statistical study, the more data you're looking at, the more the more, what's the word I'm looking for? The more data you're looking at, the more reliable your study is going to be, right? So if you're looking at a 15-minute chart, the results that you get might not be as reliable. The patterns are not going to be as reliable as when you're looking at a daily chart. Okay, same thing as a daily and a weekly. Signals on a weekly will be more significant and reliable than signals on a daily, right? You get a 13-week moving average crossover. It's going to be more important than a 13-day moving average crossover. So you get the idea. Are there any more questions? Max time frame? I think, you know, I would say monthly would be the maximum time frame I would look at. And it does help definitely to look at monthly charts, that's for sure. In fact, just this last month, I remember looking at, I'll show you. Hold on while I get this chart ready. Just this last month, I looked at this euro-dollar chart here, okay? You can see this huge wick, okay, on the euro-dollar monthly chart, November chart. And that gave me an idea, you know, that we'll probably see some weakness going into the beginning of December in the euro. Now, that really hasn't played out yet because the euro's actually rallied December, okay? It opened at 146.37, and we're just above that level now. But with that in mind, you know, you have a strategy to sell bounces, okay, sell rallies. And, you know, it fits with my Elliott wave assessment of the euro that it's coming down on wave 4, and we're due for a retrace to like at least 145. So, you know, I would say look at a monthly chart, you know, on like the last day of the month, okay? Anything else? Yeah, that's pretty funny. You know, it's all about risk management. If you're, you know, just strictly making money, that's really all about risk management. But, you know, you can have all the analysis in the world and calls in the world, but if you don't know how to manage your risk, then you're going to fail 9 times out of 10, and eventually you're going to fail completely. So You know, that just comes with practice, really. My money management strategy is, you know, to simply make money. So, you know, I'm not going to go into my complete trading techniques here or anything, but you know, that's something that you have to figure out on your own. Someone's asking, when pound dollar is dropping, why dollar CAD also dropping? What it signifies? I mentioned this earlier in this in here, is that, you know, basically the European currency is falling and the commodity currency is rallying. Okay, and that kind of fits with, you know, a return to carry in the first place and more risk taking. Okay, so again, you have to analyze each currency pair, dollar pair especially, separate. You can't just look at euro dollar and say that the dollar is going down, therefore every dollar pair is going to go down, because that's not the case. Right? There's crosses that move. In fact, they're the ones that move the most usually. So, you know, if I have a dollar CAD bearish bias and a pound dollar bearish bias, as I have for the last couple of days, and a pound CAD bearish bias is going to be probably the best trade out there. So, you know, what it signifies is that the CAD's getting stronger and the pound's getting weaker. That's all it is. Okay. Well, everybody, it's been wonderful. It's 9:30, and it's time for me to go. So I wish everyone good trading, and I will see you on the first Wednesday of next month. And be sure to check out the you know, technicals every day, daily FX, and I outline my strategy for that day, actually, for each pair, whether I'm flat, long, or short. And again, the COT report, some people asked about that, is posted every Monday morning. Okay? Everybody take care. Bye-bye.